Hello everyone, welcome back to Chadwick's Real Tips together with our famous furry assistant Shangela. This week we're going to be talking about purchasing a secondary residence, or it's synonymous, a vacation home. In order for it to qualify, especially if you're using financing as a secondary residence, it has to be a minimum of 50 miles or more from your primary residence. Tip number 2 is if you're going to be using this as an Airbnb or renting it out, that's considered income, which is taxable. If you do do financing, be sure that you wait at least a year before you start renting it out, because once you rent it, it changes from a secondary residence to a rental property. The third tip for you is before you purchase this, look at your insurance policy. First of all, what's the amount that your insurance premium? Second, what's your coverage? What is it covering if it were to experience some sort of natural disaster? We are in Colorado, we're prone to forest fires, hail, really difficult weather. So really look at the insurance premium and those documents before actually purchasing your home. And last but not least, there's a big difference between being a tourist in a vacation rental and actually owning a vacation rental. So be sure to budget to have someone provide maintenance, have eyes on the house, visit the home in your absence. The last thing you want is your property to stand alone, vacant for lengthy periods of time. It puts your investment, your dream, at risk. And congratulations, by the way, for achieving your life dream. We're here to listen to you during your real estate journey, and we advocate for your life dreams. Be sure to follow all of our social media feeds, and we'll see you next week on Chadwick's Real Tips.